Are you renewing your mortgage soon? Today I'm going to go through 3 mistakes that people commonly make when renewing their mortgage so that you can hopefully avoid them and get better rates, better products, and potentially save you thousands of dollars. Hi everyone, I'm Miles Noack of the Noack Mortgage Team powered by Indy Mortgage, and today we're going to be discussing 3 huge mistakes that people commonly make when renewing their mortgage. And at the end of the episode, I'm going to share one of the best tools I have in my arsenal that allows me to get the best rates and best products when it comes to my mortgage renewal when it comes up. So let's dive in. Mistake number 1, assuming your current lender is going to give you the best options and best rates. Many people assume their current lender will always give them the best offer and the best rates with their mortgage renewal. This can be a huge mistake. Make sure to shop around it. Don't accept the very first mortgage offer that's presented to you. There's a lot of different lenders out there and a lot of different options, and one lender might be the best lender one year, but it might not be the best lender the next year. To do this easily and save you a ton of time, a little bit of self-promotion here, it's really handy to utilize a mortgage broker when shopping for these mortgage renewals. And the reason for that is they have many different lenders that they can explore for you and present you different options that you might not have thought of prior to shopping around for a mortgage renewal. They can also provide an option known as a no-fee switch or collateral transfer, where potentially you can pick your mortgage up, take it to a new lender, keeping the balance and the amortization the same, but getting a new rate on a new term. And in that case, the lender 9 times out of 10 is going to cover things such as your legal fees or your appraisal cost or anything like that, making it really cost-effective to move over to that new lender for that new rate or new product. So it's always handy to look at what's available and shop around before signing on the dotted line. Mistake number 2, waiting too close to your renewal date before you start searching for something to renew into. The reason I bring this up is giving yourself ample time to look around and shop around to find the very best product or mortgage, or to make choices dependent on your financial situation can be really beneficial. And if you wait too close to that renewal date, you could put yourself in a position where you're under a time crunch or where you don't have enough time to get exactly what you want. Now, there are ways you can get around that, such as rolling into an open mortgage if it's available with your current lender, but that can also be costly because the interest rate on that open mortgage is going to be more expensive. The other thing you want to make sure is that if you are with a lender and you are going to be going past that renewal time, that they're not going to roll you into something that's going to charge you a penalty should it be paid out. So giving ample time is going to be really beneficial when trying to arrange your mortgage and try and arrange that renewal if you want to make any changes. And when we talk about changes, there's a couple of different things we can look at. For one, you may want to look at adding a home equity line of credit or something along those lines. Or perhaps you're looking at consolidating some debt into the mortgage or making a large purchase or an investment. Now, one of the things we see a lot of people do is they will roll their debts into their existing mortgage. They will lower their monthly payment because of doing so, but keep their monthly payment that they were existing paying. And when I say monthly payment, I mean credit card, line of credit, car loan, mortgage, total payment. And they'll keep that payment the same and put that towards the mortgage. And what we find is people can often pay their mortgage down really quickly. And if you're coming up for renewal, it's the only time you can do stuff like this penalty free. So we always recommend giving ample time to allow you to explore options and make sure you're getting the thing that's going to be right for you when it comes to your renewal. Finally, mistake number 3, not reviewing your current lender's penalty and fee structures. Another common mistake people make is not reviewing exactly how the penalties and fees are going to be structured with your mortgage. For example, if your lender is charging a penalty based on posted rates, it's going to be much higher than a lender that's basing their penalties on the discounted rates. And this could put you in a situation where doing something like a no-fee switch or moving your mortgage to a new lender for better products or rates becomes very, very difficult to do. The reason I bring this up is during COVID, we saw a lot of people look at their mortgage and say, hey, I'm going to refinance and go from, let's say, 3.89% or 3.5% down to 2% or less. And the people that were able to do this were with lenders that have discounted penalty structures, where the penalty isn't as large to move that mortgage over. So people in those positions were able to refinance, do no-fee switches, do all sorts of different things, where other people with some of our bigger bank lenders who have these larger penalties weren't able to do this because the penalty would chew up all the interest savings. It just wouldn't make sense. And we're talking penalties of $10,000, $15,000 to $20,000 versus penalties of $6,000, $7,000 or $8,000. And in these situations, it means that customer wasn't able to access those lower rates and now is coming up for renewal at the higher rate environment that we're in currently. Having something with a bit of flexibility is not going to be a bad option. Being able to move your mortgage around and make changes as you need to is always going to be beneficial. So reviewing the way that they structure their penalties can save you thousands and thousands of dollars. To sum up, Don't assume your current lender is going to give you the best option. Start exploring early, looking at different options from different lenders, maybe talking to a broker who can present you these different options and different available mortgage lenders. And always review the details of that mortgage and the penalty structures so that if you do need to make a change, you know you are able to do that. Now, as I promised, I'm going to share with you the number one tool I have in my arsenal for attaining the very best mortgage rate and the very best mortgage options available. And that tool is called a CMO, or a comparative mortgage offer. Now, this report is tailored to each individual client. It's going to outline 3 to 5 different lender options, ranging from short-term to long-term, fixed to variable, chartered bank, monoline lender, everything that you could possibly want. And by having a tool like this, it can show you the very detailed differences between these lenders. For example, what is the balance going to be at the end of the term? What is the penalty if I break my mortgage early? What are the prepayment privileges? Are they 20%, 15%? How much can I boost my payments? Can I double them up? Can I make a lump sum payment of 20% penalty free? It's also going to outline things such as portability, assumability, and everything in between. And it provides you with the choice as to where you want to go. So for example, you might be looking at a mortgage with a line of credit. There's a number of lenders that can do this, and they're all very unique and very different. So with a report like this, you have all the details spread out in front of you, allowing you to make an educated decision as to which product you want to go with and which product is going to work best for you. Now, the one caveat of getting a report like this is you need to get it from a mortgage broker. If you found this video helpful, make sure to go through my library and check out some of my other videos, and don't forget to subscribe and like the video. Thank you so much for watching. I appreciate your time. Have a great rest of your day.